Hello, everybody. How are you doing? Here is Alberto Alvarado broadcasting from Mexico City. Here is 8 a.m., 3 minutes past the hour, and it's 13 hours, 3 minutes past the hour GMT time. Today is Wednesday, September 14th, 2016, and welcome to this webinar called WoW Trades. WoW stands for Week Over Week Trades, as you already know if you've been following me for long enough. And for the ones that are new here, well, just to let you know that this is a week over week basis webinar. So let's start. Well, a little bit about me. Besides that, when you subscribe to this webinar, this information was available, but it's always a good reminder to give this reality check to remind you that I am actually a human being in this side and what my trading life's been about for these latest years. I started trading in 2005, and I lost my live account in a matter of 1 month after starting. It was more or less a $10,000 account. And after that, I got hooked to the market. So I realized that I got passionate to them, and I really wanted to take seriously my education. In that moment, the only way to educate yourself as a retail trader was self-education. We didn't have these facilities as webinars, as a lot of resources that you can rely on this moment in time. 10 years ago, it was a very different scenario. We faced a lot of dishonest practices from some brokers, etc., and the conditions were not the best. So it was way more difficult. In 2007, I started grasping the first results of my 2 years of self-education, and just to see my account evaporate again in 2008, while the big crisis happened, the crisis in 2008 that we all already know about. And at that time, I had to decide to quit or continue. And I decided to continue, but in the 2008 crisis, I realized that my edge was not complete. Since when you have a complete edge, the idea is that you can adapt to whatever trading situation you're facing, or at least to detect the ones that you are not prepared to and avoid trading. So the 2008 crisis gave me that information to me that I was not a complete trader. So I decided to start from scratch my approach. But in this case, I added some emotional and intuitional elements to my trading, and at the end, they ended up working very good for me. So what you're going to see here is the conclusion of all these years of experience, including these intuitional and emotional elements that form part of my edge. Besides that, I use traditional elements like technical indicators, MACD, RSI, and stochastics overall. I use what is called, if you've been following me for long enough, what I call fundamental dynamic levels to give the common sense back to trading and to have a working framework that is reliable, either if you want to be a bull or a bear. Knowing these fundamental dynamic levels can make a difference between understanding what the market is doing or seeing it as completely random. Okay, I don't believe in custom indicators. I don't believe in buying robots, etc. Why? Because I have always been defending the idea that the one that needs to adapt is the trader, not the tools. You need to adapt to different trading conditions using your traditional tools. You need to learn how to read them differently, adapting to the current situations, and not buying custom indicators optimized for some trading conditions. And then when those trading conditions evaporate, then your robot or your indicators stop working, etc. So keep it simple. And the most simple way to trade, keeping it simple, is keeping your traditional uh, indicators in this case, with not tweaking them, but instead of tweaking the the parameters of the indicators, tweaking the way you understand them. That's my approach. And well, besides that, I believe it's pretty much about me. So let's start. For the ones that haven't done so, I strongly suggest you to go and subscribe to my YouTube channel. Go to YouTube and type IIIVB's Trading Room channel. My picture will show up and you click subscribe. I suggest you this because in the past I used this channel to update beforehand the expiration dates in the binary options. If we shall close them beforehand, rather in a profit or in a loss, or if something really interesting and important happens, uh, that is the way that I can update you. Why? Because this is a weekly based webinar. Besides, I deliver once a month a webinar in my mother language, that is Spanish, and besides, of course, having a 1 month basis webinar, of course, needs a way to be updated. So for the ones that haven't done so, go there, subscribe. It's free content. I don't intend to sell you anything there or to spam you. Actually, this channel has been quiet for, I believe, 1 month and a half. I just uploaded a video, I believe it was 2 days before. Yeah, and it was a quick video of 5 minutes. So don't expect me to spam you with uh, useless videos there. And actually, it's a good tool in any case that you like to follow or to take the contrarian trade that I open here, that I open trades live here. You can check how they are doing and help you to decide on your best interest in those trades. Today is going to be a little bit different webinar. For the ones that follow me, usually I talk about the fundamental highlights. Then I analyze these fundamental highlights in the framework of fundamental dynamics, and then I grab the cable charts and we try to find trading opportunities. In this case, we opened two trades 3 weeks ago. 2 weeks ago. No, sorry, 3 weeks ago. The week before, one of those options closed in 100% of the potential payout, and the remaining will close today at the ending of the trading day at this midnight GMT time. And what we're going to do is just to check them how they are doing. They are doing. Why? Because up to now I don't have anything new to add to the previous webinars on the cable. I'm going to explain you why in the next minutes. But what I want to talk about is another very important aspect overall if you're a novice trader or if you are in that stage of being a break-even trader, that I say that after some time you lose all the money that you earn and you keep doing so over and over again. Usually this kind of forum posts that I'm going to review here could have a most likely negative effect on the self-esteem of a trader. So that is why I'd like to explain you, because this is part of a trader's life. When you are in that learning curve, you're going to come across very different things in forums, webinars, etc. And I would like just to show you, in my experience, if you know what, because when you are a novice trader, the most likely thing is that you would like to follow somebody. In my time when I started, that was very hard because having this kind of webinars was difficult, etc. But when you decide a forum to follow, a webinar to follow, at least you need to know the minimal elements that you need to expect from that forum of that webinarist or that trader that is saying that wants to help you. The minimal elements that you need to look for in order to not lose your time. Because at times, a lot of things that are in the forums are not useful for new traders. So we're going to check that out. This is going to be a little bit different, but this is as important as the technical and fundamental aspects. Okay? We're going to review the trades. We're going to start with that, reviewing the trades of last week, this week, and just to see how the cable is doing, and then we will jump to the webinar analysis, to the forum analysis. Well, first of all, I'd like to show you how the cable chart is looking. For the ones that have been following me, you remember that I commented, and I opened live 2 trades in the webinar. Why this is important, I stress this every time, because usually what you will find in the internet is people saying, I opened a trade at these levels, I closed the trade at these levels, and it was a winning trade. But when you try to verify that, because after the fact, it's very easy to become a trader and to be a sensational trader. After the fact, after this happened, everybody could say, I bought here, and I would have bought here. After this happened, everybody could say, I sold here, or I would have sold here. But the real difference is that you can actually follow somebody that, it's very strange that somebody will open the live account statements, because that would be even on a security flaw for the person that is broadcasting. It's like asking you to scan me a bank statement and send it to me. And in this case, it's even worse because it would be public. Okay, but at least knowing that somebody's actually opening a trade and you see this person opening it and closing it and seeing evidence of that trade that he's saying, it's important. And this is the way I like to manage the webinar, showing you the evidence. If you've been following me good enough, you remember that here in the webinar, during the webinar, I opened 2 trades with 2 different expiration dates. It was a call option, meaning a bullish option, betting for a bullish rally. One expiring Wednesday last week, and the other expiring today in some hours, maybe 12 hours or so. I opened live, and the market went in our favor. The first expiration, the first binary option, I guess, was closed here, and the other one's still open. The market retraced heavily, but still above the entry price. So what we're going to check is how they look like, and just to give you evidence of that the information that is delivered here actually is accurate. Not all of it, of course, because nobody can anticipate correctly a movement every time, but these ones, you have evidence of that. Why I still hold this bullish this call binary option, binary.com, because we were anticipating that this correction could happen. Actually, during the webinars, after opening this and after having this rally, I commented that don't even think about opening again a long trade, at least for the novices. Maybe if you are a professional trader or a profitable trader already, you can do that. Actually, you could have profit from this correction to the downside. But during this correction, I was saying that actually even having the price moving to the 1.32 could even the price at the 132 could still signal a potential movement to the upside in cable. So if you decide to go long in a position like in here, you're actually facing a potential drawdown of several pips. In this case, in binary options, you don't measure that in pips, but in any case, you don't want to open a bullish binary option here just to see it here, right? The idea is that, I've been saying this in the latest webinars, the trend will never be your friend unless you are already in the trend. Why? Because of this reason. All the fundamentals were aligning. You can check the previous webinars. I explained that in detail at that moment. I explained why at that moment, we were not going to open any trade. We were expecting the market conditions to align in our favor, etc. I was eyeing a bullish trade here, and it almost took more. I believe it was a month to open this trade without opening any. Why? Because again, this webinar is intended for the ones that are looking for information to start their trading careers, or if you're in a break-even stage of your trading career. If you're already a profitable trader, maybe you're not even watching this webinars because you're busy generating profits, right? So it's very important for me in the webinars that information that I deliver here, actually you can learn from it. That actually you are non-dependent of me. What I mean with that, that information that you can grab here, that you can learn here, the experience that you generate with these starting points that I show you here in the webinars, actually you can take that information, that learning from here, and you can learn of it, and you don't depend on me. Because that's a very tricky thing when somebody is willing to sell you a coaching service, signal service, whatever. They really want to become they really want to become you dependent, to continue paying a service, etc. That's not my interest. My interest is helping you, having the tools that are useful for me, give you the insights, how I use them, how I understand them, and with your work and working on that in maybe in some time, you will generate your very own way to understand those tools and then be non-dependent on the information that you receive here. Okay. Well, coming back to the trades, I was saying when we opened this trade that the potential was to the upside and it was not coincidence. So that is why I opened two bullish trades with two different expiration dates. Why I have not closed this trade in advance? Well, because again, this retracement, I anticipated that after the price hitting these heights. I explained that in the previous webinars if you want to go there and check it out in the binary.com's YouTube channel. So that is why I was saying that the trend for me was set during all this stage. Here was the optimal entry price. You can see that because after that the movement went completely in our favor. This retracement was foreseeable. This doesn't change my bias, at least not so far. Having the price breaking this trend line and the activity between the 132 and the 133 is going to be the one that could rule out my bullish outlook on this. I am eyeing a 1.37 retest in this bullish opportunity. Of course, the markets are not that precise, and we need to adapt. And yes, even though this retracement was foreseeable, at least for me, this breakout, I don't like it. Okay, so what happens in the one between the 132 and 133 is the one that will let me know if I continue with my bullish bias. Of course, this last binary option expires today, and the reason I haven't closed it is because of this candle. This candle was generated because we have an outstanding, I believe it was a services PMI in the UK, and it continued going up. This retracement up to here was foreseeable, so this could be read as a false breakout that the markets love. The people that love to buy things, they love to buy in false breakouts. Besides, this price corresponds to this fundamental event. Besides, none of the previous explained fundamental dynamic levels in the previous webinars have been altered by this. So I don't have any fundamental reason to believe that the outlook changed, at least not up to today. I can tell you tomorrow. What I strongly expect is that the price will hold at the 132 today, between 132, 132.30, even the 133, and this binary option will be closed in profit. Why? Because of this. This breakout to the upside was due to a fundamental event. It was not random. Remember this word random because we were going to be talking about that. Okay. So well, this is why and this is how it looks like. Besides, look, this is a 2-hour chart. Look, the MACD cross. Even though it's negative territory, it's just crossing to the upside. So the real bad movement was this one that was originated at zero line. It generated this very steep movement to the downside in the MACD, and it's just crossed over to the upside. And look, the RSI, it's above the 30. and the fastest stochastics is pretty much at half of the range. So yeah, I don't have reasons to panic. Okay, so well, just to update you, the technicals on the trade that we opened 3 weeks ago, 2 weeks ago, sorry. This is the binary option that I opened live that expired last week. This is how it went. This is the contract ID, the reference ID, the start time, the ending time. It was September the 7th, 1 week ago. The entry price was 131.07. I opened this live, and well, the potential payout is depending on your risk tolerance, etc. This is only for demonstrative. Uh, this demonstrative objective. So I just take the default value in the binary.com that it's $10. The exit spot, I wanted to check this out. It was 133.38. It was closed at midnight, September the 7th. Okay, so this is, if you measure it, it is 230 pip difference from the entry price and the exit price. I want you to check this out. When I opened the trade, I explained that last week. Can you imagine when I started getting worried about this trade? The answer is never. The information that is delivered here, the objective is that you decide whether you decide to go long or short, is that you decide to open it for the right reasons. It's irrelevant if it's okay, it's correct or not. Because as a trader, you will open a lot of failed trades. And the difference, what you do with the failed trades and how you manage the correct ones, that can eventually have a positive effect for you as a trader. So it's irrelevant, but what it's not irrelevant, it's the reasons you open a trade. That's the whole difference. And this fundamental framework that I give you every time that we come to the webinar, that's the difference. Because you actually know that you're opening a trade for the right reasons. And usually this happens. Either immediately it goes in your favor or immediately it goes against you. So you don't have anything to be worried about during the duration of the trade. Why? Because if immediately it goes against you, the most likely thing, and you will already know it in advance, is that that trade will be a failed one. Maybe if you put a 1 week expiration, maybe after 3-4 days, if the trade's still against you, you can close it in advance using this market selling at market option, binary.com, and you will reduce the overall risk of that trade. In this case, look at this. We open it at this price. Immediately it went up and up and up. This was the first retracement that, again, was anticipated here, so I was not panicking at any moment. This is the difference. If this had been a failed trade, the most likely thing is that it would happen the complete opposite. But I explained the last webinar that I know what it feels to open a trade, that it's positive in the first 12 hours, you go to sleep, you come back, and it retraces completely. Opening trades for the right reasons, avoid that. Not all the time, but most of the times. And you can actually know if the trade goes against you in the first 3 days. If it goes against you, the most likely thing is that it won't come back, because it's based on all the aspects that needs to be considered when you are a trader. The fundamentals translated into price action, and the technicals. Okay, so well, this is the evidence of the binary option that was closed in profit, and this is the binary option that is opened still. It's the same entry price. You can see the contract ID, the entry price 131.07. Okay, and the spot is 131.88. It's 85 pips in our favor. It's good enough distance overall, because since this was generated by a fundamental highlight, every time this happens, the market stabilizes usually at these prices to test if actually the movement to the upside is sustainable or not. I could have closed this trade yesterday because of that breakout of this trend line that I showed you at the beginning. But most part of the binary option passed, the time passed. I sustained this trade for almost 2 weeks. I know that this before opening, I mean, when the price was here, I knew that this was the line in the sand. I mean, this whole this what happens in this whole this area. In any case, it is retraced. So as you can see, the market tumbled and it's kind of stabilizing here in the 2-hour chart. You see that the MACD is starting to cross to the upside, even though it's in the negative side. The RSI is above the oversold condition, and it came from the oversold condition. The stochastics is at 50. So I just decided to, okay, let's continue with this trade. At times, this depends on you. It depends on your risk tolerance, because if you are really, really nervous trader in the first signs that you actually start having technical indications that this could start turning in against you, you can close them. That's completely correct. But in this case, I just decided to keep it open because of this. If we hadn't have this fundamental high like price action, of course I would have closed it here. Not at 100% of the profit, but maybe at 60% of the maximum profit. But overall, a profitable trade, you know. So, well, this is how this looks like. Now, let's begin with this. Well, just to remind you, we're not going to open any new trade. Here, we don't have conditions now. Well, I need to see what happens in this week overall between the 132 and the 133 to maybe see if we have possibilities to open another long trade or a short trade. But I need to see what happens between the 132 and the 133. Okay, and I see. Well, I see that I have a question here, but it's in Russian. I don't speak Russian, sorry. Okay, so let's continue with this. I was really thinking or not to do this or not because but when I remembered my previous stages as a trader, I remember finding this kind of information all across the internet and how reading this demolished my self-esteem as a trader and actually made me be fearful of trading. That is why I'm going to explain you my opinion on this. In a forum, I'm not going to say the name, I found this that says consistent income from trading is a myth. This guy called Go Big FX posted this. Hi guys, one of my friends just posted this video on YouTube channel and I thought many of you would like to see it. Up to that point, everything is fine. I work at the same prop firm. For the ones that don't know what prop firm means, is proprietary firm. That actually this is a contradiction. I'm going to explain you why. As this guy and my equity curve looks pretty similar, just over a much larger sample size, and many of other traders here have similar shaped curves. It's important for you to have a realistic expectation, so that's why I thought you would enjoy this video. Okay. Proprietary trading is something that I don't know to say if it's only applicable to investment banks. What is that? Proprietary trading is when you take the people's money and you trade with that money without sharing any of the profits with that person or with the person. That happens all the time in the banks. After the 2008 crisis, there was a strong regulation of that because the banks, in few words, the banks usually take your money, risk your money, generate money with your money, they keep the profits, and they don't share it with you. This is a common practice in the investment banks and in the banks, okay? If this guy means a prop firm as a firm, a desk that creates, I don't know, robots for trading or that manage money for other people, etc. So this is the first highlight. When you see this video, in the bottom line, what you see is a guy shows up making propaganda of his image, showing you a supposed MetaTrader statement, live statement, with a fantastic equity cure. But what he was saying is that actually trading in the long term and being profitable consistently is not possible. But he was assuring this, he was confirming this. And you know what? When you're a trader, I've been explaining in other webinars and to other fellow traders. Trading is pretty much what you make of it. Trading itself, it's a tool by itself. It's not an objective. At the end, when you get to a stage to understand that actually trading is a tool to take the best out of you, to take the best talents, the best skills of you out of you. Depending on that, your preparation, your discipline are the results that you're going to receive. So nobody, and this is like applicable to any aspect of life. Don't allow anybody to tell you how to think or what to think or what you are capable of or what you are not capable of. This is like Life 101. But this guy, conveniently at the beginning, it shows himself in front of a lot of screens, promoting his name, his brand, his name, showing this, and making a favor to people, letting know this information that actually it is not possible. Okay, when you see this, I already knew at that moment what this thread would turn out to be, the emotions that this thread would throw, and how this could turn. Actually, it happened. But at the beginning, this was very interesting for a lot of newbie traders. But actually, this is misleading. If you've been following me for good enough, you have realized the first things that you have to check if you decide to follow somebody or not, trading, a forum, webinar, is this guy or this woman actually interested in teaching me? Is actually interested in helping me? Or is trying to set up a stage to make me believe something that could actually after come and try to sell me something? Because if the answer for this second question is yes, the most likely thing is that the only interest this guy has or could have is to sell you something, not to in fact help you. If somebody comes and tells you this is the only accurate way to trade, this is the first red signal that you need to check. Trading is relative. You won't find any identical approach to the markets from one trader to another. Trading is a tool by itself. That is why it's so relative. That is why something that works for me, for example, the intuitional and emotional elements that form part of my edge, that actually I couldn't, even if I wanted, I couldn't explain it because it's something that I feel, is something that I know. You can't explain an intuition, and I can bet that you, along your life, have had intuitions in your life. Something that simply doesn't look right, and you just don't take it, or you take a decision based on intuition, and you just simply don't know why. But there is something, a bell in your head that says this is the right path or not. It's the same thing that happens to me. So explaining an edge is something that cannot be done because it's something that belongs only to you. And it's something that's only useful for you, and that is why you cannot explain it because you're actually the only one understanding it. That is why a thing that works for me, for example, my edge plus watching Magadi, is telling me you don't have to close this in advance. Maybe I could be wrong. Well, no problem. But maybe for somebody, that wouldn't work at all. That would cause a lot of stress and make a trader commit a lot of mistakes, etc. Okay, so when you are looking for following somebody, you need to check, make that reality check. For example, this video actually didn't help anybody. He informs that nobody in the internet, in the Forex industry, could profit consistently. But he doesn't even care to define what consistently means for him. Because if for him consistently is winning every trade, every time, 100% of the trades that you could open a day, well, maybe he's right. I mean, the most likely thing is that this he is correct. I wouldn't be surprised to see somebody doing that one day, for example, to have 100% of profitable trades in one day. But that's not sustainable, or at least that is what I believe. Of course, not because I believe it means that somebody cannot do it consistently, but it would be very strange. Okay, that's the difference. How you shape your thoughts in words is something that you need to check to see if somebody could actually help you or mislead you in this trading forex industry. Okay, so well, he doesn't define consistently. He only more or less says that basically what he says in the video is, in all this stage, I didn't open any trade because there was no profitable option. So that is why there is no way to consistently trade the markets profitably. But the correct way to say that is, I didn't open any trade because I didn't see any trading potential opportunity. And I cannot profitably, consistently trade profitably the markets during these conditions. It's a very subjective matter. It's relative. It's relative to what? No, it's relative to whom. Because yes, there are traders that open several hundreds of trades a day. They scalp the market and they generate money. This happens all the time in the investment banking. Why? Because they have a lot of traders scalping the market, grabbing 1 pip, 2 pip, besides another areas in the banks, etc., in the investment banks or hedge funds. And that happens because it can be done. If this guy, for some reason, cannot do it, it's not fair for all the rest that this guy, just because he couldn't make it, to convince others that it is not possible. Imagine if it's Usain Bolt, this Jamaican runner in the Olympics, that I believe he runs the 100 meter in less than 9 seconds or something like that. If somebody had done his best to convince him that it is not possible to do that, maybe he's the only one being able to do that in the world, but if somebody had pushed hard enough to convince him that it was not possible, maybe he wouldn't be running. So don't allow ever nobody to cut your dreams or your expectations. Of course, you need to be realistic, yes. This guy justifies this video saying this is the way to have realistic expectations. Okay, yes. But we need to understand that trading is relative and that you can actually find a way much better trader than you. And maybe they wouldn't like to see that. The most likely thing is that this, at some point, because it's curious, you know, previous posts of this guy in this guy's YouTube channel, he has a lot of videos saying that he generated, let's say, some $1,000 in 1 week, and the next video is the same thing, and next video is the same thing, and then this video comes in. It's like, okay, you're contradicting yourself. You're saying that it's not possible to profit consistently, but you're actually posting videos that you are trading consistently. So why you are suddenly saying this? overall, when it's with the word consistently, well, the most likely thing is because at some point this guy would be interested in selling you something. In the internet, you can be whomever you want. I can tell you that I have worked for Goldman Sachs and whatever. And actually, there is no real way to verify that. I mean, unless you work in Goldman Sachs, maybe you can check out if I have ever worked there. I never worked there, but there are a lot of dishonest people on the internet that are very eager to grab the money of the people that is desperate. And there are ways to detect this kind of people. Is the language they use, is how they strongly want to convince others that the only correct view is theirs. You know, I never sustain here that abolish trade, for example, we open abolish trade, that is the only way to see it. Of course not. I could, because I know I could be wrong. So I don't have any right to disqualify any other's opinion because I could be wrong. That's the point. When you realize trading it's a relative thing, you actually are not very willing to try to demonstrate or convince people or to fight at people that doesn't think like you. Because at the end, yes, they could be right. So what's the uh, what's the deal with it? The difference between becoming a good trader and a bad trader is how you deal with the losing ones and how you treat the winning ones. Not if you are right all the time. Of course, it is not, you cannot profit from the market consistently if you believe that consistency is 100% of correct trades. After 100 trades, the most likely thing is that you, only by probabilities, you will be wrong at one. And if that wrong trade, you bet it all and you lost it all, that's the difference between a responsible trader and an irresponsible trader. So the complete focus on this post, on this thread, is misleading. It's not helping actually anybody. What knowing that consistently you cannot profit consistently in the market helps anybody? That helps nobody. That will help these people when he comes and tells you, hey, you know what? Ta-da! Here is my robot that will help you to trade consistently. So it's like, okay, first you try to convince me here, then you're selling me something. I don't know. The only thing that I know is that after this comments, this thread, this member was moved to what is called a commercial area. There are people that could most likely to want to sell you something or etc. There I belong to the commercial member area because I wanted to be there. Because for promoting, for example, the binary.com webinars there, they don't allow you to do that if you don't, if you're not a commercial member. But the difference is that I'm not here to convince you that you cannot trade consistently. But I show you the videos saying and showing you how consistent I am. So it's like a no-brainer that the next step is telling you that you need my services because you cannot do it, but I can. So how about selling you a robot or a service, whatever? This is a member that I got to know because when I was in my break-even stage as a trader, I had the opportunity to know a guy from Lithuania that was telling me that this guy was following this member, and he said me a lot of marvelous things of him as a mentor, etc. So I decided to give it a shot and to try to follow his posts. This guy actually wrote a book, so that's kind of a difference. I read not 100% of his book, but the great difference of his book in comparison to others is that actually this book doesn't lose half of the book explaining you the basics of Forex. If you buy a book through Amazon or whatever talking about Forex, the most likely thing is that more than half of the book will talk to you about pips, leverage, Forex industry, what means currencies, what mean pairs, and that's the half of the book. It's the same things that are not precisely what you're looking in a Forex book when you're trying to develop your edge. That's like the same thing in every single book. So actually, that is what I'd like from his book. It's not quite my style, so I quit following him. But yes, I have to recognize that his approach on writing a book was completely different to a lot of very famous ones. This guy says he's trading the markets from he has 23 years. He's been profitably consistently, and actually his approach is way more smart. Read this post. After having and watching this video, this guy posted, brain surgery is a consistent way of making money only for properly educated, knowledgeable, and experienced brain surgeons. Trading is not different. Like any other profession, though. Also, yet to see a random market, have no idea how it might look like. He comments this because in the video, this guy says that we are slaves of volatility. That actually volatility is randomness at its best. Well, I can tell you that I don't, and I insist, I don't. I'm not saying that this is the truth, because this is the truth for me, not necessarily for everybody. But trying to convince somebody that you have the truth in this thing is converting this into a religion, into a sect. And this industry is not that. Actually, is way far from that. Okay, so volatility has a reason to exist. Volatility cannot be anticipated every time, every moment. But if you've been following me for good enough, you have realized that working within a fundamental dynamic lever framework actually gives sense to volatility. So when you have a reason under which you can at least understand in your means, in your ways, volatility takes the random factor out of it. Why? Because you're reading it with a common sense approach. The one that I repeat over and over here in the webinars, the common sense approach based on fundamentals. Volatility, yes, could be something that happens in the market due to different reasons, unexpected bad data, etc. But the fundamental dynamic levels that I talk here actually takes that randomness out. That doesn't mean that there is not actually some kind of randomness. There is randomness because we actually don't know who's gonna buy and how much is gonna buy at some moment in time. That's the randomness. It's like, let me tell you something. Let's talk about a retail store, Walmart. Of course, this institution deals with randomness. The institution, Walmart, doesn't know exactly how much is going to spend everybody that enters into that store and what things this guy or this woman is going to take out of Walmart. But even though with that, let's call it randomness, actually Walmart can project sales, expected income, expected buying habits, because it's based on patterns or on a much more complex approach into the retail industry. It's the same thing here. Randomness, volatility happens because we don't know who's adapting and what are the interests of the people at some moment in time buying or selling. We don't know that, but you don't need to, because the common sense approach on trading allows you to take your decisions considering that fact, that even though randomness happens, there is actually, like, you know what? You can understand randomness like the upper waves of the sea, the ones that the surfers use. And even though they manage to ride the waves, right? But regardless of what happens in the upper waves, you have the lower tides, the ones that really move the masses of water of the sea. That real tides are the fundamentals. So yeah, randomness exists, but even though the random tides at the bottom doesn't affect the real tides at the top, They don't affect the tides at the bottom, the real big ones. So besides, he's not defining volatility. He's only using maybe the mathematical definition of volatility, but not applied into trading. Besides, the forex industry, the markets are a social science. Well, I don't like to call it science, but it's a social thing. Because the ones opening trades, closing trades are the humans, helped by computers in a lot of cases, yes. But the ones that program those computers are humans. And they follow interest, they follow patterns, they follow fundamental expectations. So is volatility really random, or is volatility something that helps the fundamentals to happen? If you have a volatility against a fundamental trend, actually that helps the fundamental trend. So is randomness really random? Or you can, even though it is kind of random, find a use for that randomness. The last answer for of this guy, this thread became an aggression one, everybody disqualifying the other, saying bad words, etc. So again, if you're going to follow somebody, you need to check out that this person doesn't fall into this category of a troll. Because if you have somebody that the first reaction when somebody says, I don't agree, is to take it personal, the most likely thing is that he's not really interested in teaching, because he's not even good at teaching, because he cannot explain himself without falling into the emotions. Okay? So that's another thing. The last reply, interesting reply from this guy said, obviously, these both videos, because after he uploaded an update of trading the markets, you cannot trade the markets profitably consistently, but these two videos show how he can. Okay? Obviously, these both videos are the best misleading and at worst are gravely dangerous because they promote false views and are full of misconceptions. I would never recommend to watch something like that to novices who, by following these leads, might result in great losses for themselves and at the same time getting discouraged from learning a safe way of doing this business. It's exactly that. That is why you need to always, before following somebody, to answer you this question that this guy is pointing out, is not being useful at all. When you find somebody that is telling you free signals, for example, well, at least most part of the times I see somebody selling free signals in forums, at some point they want to sell you that. And it's okay. But the thing is that people tend to believe other things misled by these people. At the end, this kind of dynamics, this guy that posted this video, is not helping anybody. Because of the style, he's aggressive, this guy is disqualifying the other guy. This is the problem, that this Igor actually is saying you are wrong. He's not saying I am right, but he's saying you are wrong. So maybe the idealistic thing that you need to look for, somebody you want to follow, is somebody that is tolerant. Because you need a lot of tolerance while trading. Because since it's a very subjective matter, everybody will understand the difference. So you need to be able to have patience. To have patience when somebody comes and says you're wrong. Well, maybe. That's the answer. Maybe I'm wrong. So what? I'm not here, for example, I became a trader not to be right, not to convince others. The actual is because I wanted to grab a profit from the markets. I'm not interested in the title. I have to be 100% of the times correct. No, that's irrelevant. What's your objective being a trader? To find self-assurance? Because maybe somebody lacks of self-esteem for some reason, wants to come here and promote himself like the non plus ultra mentor. Not personally, but I at least know of two cases of two verifiable, profitable traders that are selling their coaching services, but just because of their attitude, arrogant, I can bet that a lot of people wouldn't simply learn from him. Because when you teach somebody, you need to put yourself into others' shoes to understand reality in the way they understand it. And then try to find a way to make this person to understand the market by their own means in a creative manner. So remember, every time that you come across this kind of threads, even webinars, watch the language. If the language is, I have the whole truth, I am the one consistently profitable, watch out. Not because it is wrong, you can find a lot of profitable traders with a low self-esteem that could use this kind of language. But even though, is it useful to follow somebody that it's an arrogant, that it's profitable, it's arrogant? You know what? When somebody is arrogant, is associating what he or she knows with this arrogance. And at some point, that won't allow that people to share you all the information. Because I don't believe that some of them would like to see somebody be more successful or to use all the information to become the competition. Okay? It's a matter of style. If you really like somebody yelling at you, letting you know that you know nothing, that without him you are nothing, well, maybe you would choose an arrogant guy. But that's not good for the self-esteem. That creates codependent traders, and that's not a trader. I bet that you are here because you're looking for much more than financial independence, a complete independence of your time overall. You want to take back the control of your time, being able to travel if you want, when you want, with whom you want, without having to ask permission. Okay? Selecting the one that you want to follow tells a lot more about you than about the one you're following. So make this reality check. If you're really following somebody, what are the reasons that led you to choose these people? Because if it's a guy that treats with disrespect others, watch out. Maybe the one that you need to check is yourself. Why? Because having a good self-esteem is the only thing that will make you open way in this Forex world. Because it's a matter of you, and only you, your values, your resilience, your strength, your determination, and somebody that likes somebody that humiliates others could lack of some of those aspects. Just to close, and I just remembered this example. I don't know if you're familiar with the movies that is called Pi, about this number. If you haven't watched it, watch it. There is a moment they like to play this game called Go. That is it's not chess game, but it's a board that you start putting black or white pieces, and the idea is like a territorial game. This guy in the Pi movie was trying to find patterns in the stock markets through Pi, the Pi number. At some moment they talk about randomness, and I believe that this applies. At some point he explains a Go game, it's completely random because you really don't know what shape it will take. But as along with how the game starts and starts moving forward, the possibilities are being reduced. If you have to choose 100 numbers, of course it's really random to know which one's going to be the first. But once you have the first, the second, the 10 first, the 20 first, the 20 movements after, you can actually know more or less what is the most likely move for somebody that knows what he is doing. It's the same thing in chess. So randomness exists, but it's part of life. So having randomness in your life, like for example, not having the certainty whom you're going to come across today when you go out to the street, or what challenges you're going to face today, that doesn't mean that you cannot actually have a profitable life, a good life. So why randomness in the markets should be an obstacle to become a good trader? I hope that this very different approach in this webinar was useful for you. This is the first time I take this psychological side on my webinars. I believe that this is as important as the fundamental and technicals, etc., because as I just explained, trading is a tool by itself that will take everything, the best or the worst of you. So the more you are conscious about that, the more you will realize of the importance of keeping a safe mindset in the approach to trading. And this kind of aspects, knowing that you will find a lot of garbage in the internet of people humiliating others, or telling you what to do and what to think, and you are wrong because just because he or she says so, etc. That's not helpful for an ecological and correct mindset, an emotional mindset to trading. And since the challenges that you're going to face if you chose this path of trading are going to be very tough, you don't have the chance to risk or lose your time with people that actually don't want to help you. If you are the ones that don't want to do this by yourself, well, maybe these kind of guys are the correct ones because they will try to sell you something. At the end, maybe you will lose it all. But in the other hand, you are not really up to paying the price of a trader. That it's consistency, discipline, etc., and getting informed and choosing the right sources of information. But what I believe is that the people that is here and that continuously come to my webinars are actually looking to learn by themselves. Because it would be, if you are looking for the easy thing, looking for somebody that gives free signals every time, etc., you wouldn't be coming. Because you already know that this is not my style. So I assume that the ones here are the ones that are really, really into making this part of their lifestyles. And it's way more complex than numbers, than fundamentals. The psychological part is very important. The one you're following tells you a lot of you, much about you than the other. So hopefully this is the first of this psychology-oriented webinars that I will deliver when I don't have anything new to say into the markets, because the trend is still intact and the market is not giving me relevant information. I will try to come with this kind of webinars. Hope you enjoyed it. Hope you found this useful. Remember that if you're interested in checking out again the information here, you can check that out in the binary.com YouTube channel. They upload this video tomorrow. You'd receive every time a confirmation email of that fact. And I would like to thank everybody for being around. And remember that I expect you next week, same time, same place. Trade safe. This was Alberto Alvarado. Be safe and bye-bye.